Hi again, this is Rick with AmazingAccuracy.com, and today is January 24th, 2019. It is currently 8:30 p.m. Chicago time. All right, well, it's been a little while since my last video, so it's time again to take a look at a currency market. And today I've chosen to take a look at the British pound. Now, you're currently looking at a chart of the daily British pound market. And the reason why I wanted to bring this one up is because there are two turn dates, daily turn dates, that I think you would be interested in knowing about. Now, today was a negative day. That's this red bar you see right here for today, January 24th. And tomorrow, today and tomorrow, technically, you can see it says 125, 124 right here. In this F date here is for 124, and this is telling me that we should see some kind of reversal. The only thing that I have a question about this is whether this is an overall reversal and the market would just start going down to the next turn date, which I'm going to share with you I have here for January 30th, or it's only going to be a one-day correction, then continue up and make another top on January 30th before finally turning down. So here's the thing. When I'm taking a look at some of my applications that I use for forecasting these short-term turns, there have been times, at least 50% of the time, where this cycle time period turned out to be a one-day correction before resuming again. So it ended up being a turn, but it ended up being a turn, then another turn immediately thereafter. Okay, so that is something you'll need to watch, and one of the reasons why I'm kind of cautious about this is because we have yet to enter this green area here, which is the overbought zone. Had this bar been in the overbought zone, I would have way more confidence. Another thing, too, is that I don't usually concern myself with these kind of turns when we're looking at the top. In other words, the trend has been moving up, and you know what they say, don't trade against the trend. So technically, I wouldn't just be shorting this market just for the sake of shorting a bullish market. I would have to see more evidence that the things I am expecting to happen are indeed happening. So when I don't get, the top inside of a nice overbought zone like this, and I get other indications, like I've pointed out, I wish I could show that to you here. You know what? I'm going to pause this. To you, it won't look like a pause, but I'm going to pause this recording and make a snapshot of it. Hold on. Okay, and of course with the miracle of movie magic, I was able to do this really quick. But here, I took a snapshot of one of my applications, and you'll notice here's the 125 that I had mentioned, and then here's the 130 that's next. But you'll notice here that 124, 125 has some pairing offs, so the cycle has at times done a double whammy instead of just giving you one turn or the other. So that is why I am a little concerned that since we have not quite made it to the overbought zone yet, that we could be just looking at a pullback here. So to be sure, what would you do? Well, one, you wouldn't do anything and you would watch what would happen tomorrow, which is January 25th. Let's say January 25th went higher. Okay, scenario one, prices instead go higher. Well, that would immediately tell me then that 125, January 25th, is going to be a swing top, and we would expect then the market to overall turn down until January 30th. Got that? Now, second scenario. Tomorrow, instead of going higher into the green, it goes lower than the low of January 24th, thus making January 24th a swing top. Now we have the first part of what we expected. But what about the possibility that January 25th could also give us one of those double whammies, like a one-day correction like you see right here? See how you have a top, and then you end up with a bottom, and then it keeps going up, top, then bottom, then goes up again. It happens. So if we get a lower low bar right here, for example, and that's a possibility that it will go top and bottom and then move up to January 30, what you can do is if you want to trade it, you can put a buy right above that January 25th high, and that would be, of course, after the close of January 25th. Let the price bar form completely before you act on it. Then if we indeed are getting a high, then swing bottom, and a continuation, you would catch that continuation when prices move above the high of January 25th. You see how that works? I hope you understand what I'm saying. If not, email me. Okay, now, if, for example, it's January 24th is going to hold as the high, and you have the 25th, with the lower bar here, and it doesn't break above 125 high to go to 130, but instead if it breaks the low of 125, then you'd be expecting it to continue down to 130. You see? So you're going to play off that 125 bar. That's going to be the bar of decision if you really want to trade this market off of this particular forecast. I hope that makes sense. So there's your three situations. Okay? Now, the other thing is whatever it does here, look for the next turn to occur on January 30th. Now, of course, we always expect things to happen on time, but you got to give it plus or minus a bar. That's how life goes. So never just jump in until you have confirmation. And you know how you confirm a swing, right? Is when price breaks the other end of that price bar range. That's when you go in and you can enter if you want to trade off that. And then I'm looking at that to go down for a few days into February. And, well, that pretty much ends this short term. I could keep on going with more and more dates, but let's just stick with the 125, 124. That's now going to the 130, the scenarios I've given you. On the weekly, just real quick on the weekly, there is a turn date expected. It says this week. But if it goes to 130, it's going to actually be this 2-1 area right here, which would be early next week. So expect it anyway around this time period, okay? We had the bottom here occurred one bar early. You can see right here that we caught this bottom here. It was one bar early than what was expected. And now we're looking for a top based on this here. And if it happens to be one bar late, it's going to be that 130 that we just looked at. Boom, right here, for example. So anyway, here is the overbought for the weekly. So that's something I'm going to want to look at along with the overbought zone here in the daily. If you want to know what price begins that overbought, let me just do this right here and see what that falls at. And it looks like it's at roughly 131.84, okay, on the daily. 131.84 looks like the beginning of that. And, of course, the range goes up to 133.05. Okay, so I hope that you find that useful. Anyway, that's going to wrap up this video. Thanks again for watching. Subscribe if you haven't done so already. And I'll see you in the next video.